Hello guys, thanks for tuning in here with Trading for Everyone. In this video, I'm going to be breaking down UGAZ for you, UGAZ and DGAZ in the late in the afternoon on Friday. So, well, as you can see, natural gas was pushing up during pre-market hours. You can see here during pre-market hours, natural gas was pushing up, an ascending pattern. When it approached the opening of the markets, right around 11:30, it was pushing down and breaking lower lows. If you had seen any new highs, you probably could enter the position and holding it up to previous pre-market highs right about this point, or perhaps a 0.7% profit. But well, we didn't see that. We saw a break of pattern, and we could be skeptical of what happened next. I wouldn't have made any trade during the first hour of the day, since I didn't had a clear indication of if natural gas was pushing up or down. And we can see here that it sold off, then it came up a little bit without going up to previous highs, just this point here in the pre-markets of natural gas, and then it went down and holding it for these lows. When it went up and broke above this point, this 2.66 point, right about 1 o'clock and 18 minutes, it's when I would have entered a trade on UGAZ until this point, probably. Perhaps tested new highs, but I would probably have looked a little bit in the level 2, and if the level 2 was strong, I would have held it. If not, I would have closed the trade right about 0.5% profit. So right about that's on natural gas. So on UGAZ, as you know, it's multiplied by 3 because it's a leveraged ETF. So as you can see here, right about 1 o'clock and 10 minutes, it started pushing up, and about 10 minutes after, so let's see here, it's right about this moment it started pushing up, as you can see here, and right about this moment where it broke previous highs, that's the moment that that natural gas also broke the pattern that's previous resistance. So as you know, I really like entering the position in a retest. So as you can see really clearly here, price went down, had this consolidation, perhaps went down and broke above pattern, and I would have seeked for lower lows and enter a position in DGAZ, but it was not the case. It held above this resistance, this support, and then went to test the previous resistance point, and when it broke above, here as you can see natural gas quite heavily with lots of volume traded, so that's a good indication. And well, as you can see here in natural gas area, in the UGAZ area, it was the same. It was quite a good amount of volume. That's a good indication, so I would probably went up, wait for the retest, and if I saw this kind of candles, perhaps wait another one and enter the trade right about here. We probably were in a 0.2% loss, but if it didn't broke above this previous high, so if it went down like here, like I would have closed the trade, but it didn't went up. It didn't went down 0.4%. It went down only 0.25%. I would have holded the trade until it reached these highs. So that highs are right about 1 o'clock and 37 minutes. So it's right about here, in this area. As you can see, there was a previous resistant double top here in pre-market hours. So perhaps you could have held it through there, but since natural gas has already went to the previous highs, I would probably close the position. So, well, as you can see here, these movements are really 3 times the movements of natural gas. So as you can see, from low to high, it's 1.7%. Here from low to high, it's almost 5%. But well, it's really risky ETFs and ETNs because they are leverages. So well, as you can see here, it went down for retest. I would have entered the position, hold it to these highs, but more optimally to these highs. So these highs went down at 1 and 34. So at 1 and 34, it's these highs. So at this high, I would have closed the trade for a 1.2% profit. That's really good. A 1% profit is the optimal trade amount for me because it's a really short amount of time. As you can see here, it's right about 11 minutes, perhaps 15. But it's a really good amount of time to enter a position and exit, and while having a 1% profit. For example, if you trade with $1,000, that would be $10. And if you trade with $10,000, that would be $100 for just 11 minutes. So, well, that's a really good amount. As you know, I really like going for the break-ins, the breaks above the descending patterns. So as you can see here, that's a break. Previous highs, not a double top. I would have entered the position here, exited where I saw the resistance. That's here a lot of volume. The start of the candle, it started going down, close the trade. So that's an impulse trading, same as this. As you know, I really like this kinds of going down really kind of quickly and then breaking above and holding above. As you can see here, it's holding above these previous highs. So these candles here are holding above these previous highs. That's a really good sign. Enter a trade, 1% profit in just 2 minutes. Here it's the same. As you can see, going down. But this, as you know, I'd like to wait until the second candle forms. And this is not a good candle since the majority of the movement has already gone through in the previous candle. So it's a really big candle. Like as you can see, this one is not so big as this one, and this one is really quite small. This here is a doji and decisive. Here's a really decisive for the upside. Enter the trade, 1%. Here it's a really big one. So if you enter the trade here, the margin of profit for the next high, it's really low. If you enter the trade here, the margin of profit to the previous high is 0.7. It's decent, but here it's just 0.4. It's not good enough. Since you can lose everything and go to previous lows, so it's just a 1% loss for a 4%, 3.6% profit. It's 1 to 3, but on the opposite side. So it's really not good. I really like a 2-1 or a 3-1 profit to loss ratio. This one is a loss to profit ratio, so that's not good. Here we can see another sell-off. That's really going down, holding above previous resistance. That's a really recent support, but it's also the previous resistance. So it's a really has a lot of strength, this price point. So here break above the exponential moving average, enter the position, and retest new highs. that's really these are more kind of risky moves, since you don't know where you're going to close your trades. As you can see, perhaps in previous in the first of the trade of the morning, I would have taken, that's this one, this retest. I already knew I would go up to this point, this price point. Indeed, this price point, this resistance, that's not the same, but it's near. It's this one. This one's the same because it hit that in the same amount of time, 34. So well, but this kind of trade, it went up, went down to retest, enter the trade, and you already know that you are going to sell the trade and to like close and to take the profits home once price on natural gas goes up to previous highs. That's all. As you know, as you perhaps know, if you saw any of my videos, I really like not holding it the complete movement, just perhaps 80% of the movement, to have some profits. And if you are consistent, it's better to take 8%, 80%, 80%, 80% of what you have stipulated for the 2-1 or 3-1% ratio for profit loss, than to set up a 3-1 ratio and take the full amount, and on half of the trades not making to the full amount. Because in this one we were kind of lucky that it continued pushing after. But if it had gone down and we would like to close the trade here and we set a limit order here, it wouldn't have reached if the price had went down. So just take that into account. And well, after that, you can see here that a new high was C. And here that's the common pattern that I really like. Since all day long UGAZ was pushing up, that's really the ETN that we have to take into account, not DGAZ, because it's better to profit from the upside, this kind of movements. Because if we miss the opportunity, of if we enter the trade too high, we are always backed in the really medium term move of the day, that's the going up. So it's like more safe to enter a position in UGAZ, even though you enter in a bad moment, since if you enter perhaps a trade on DGAZ, like on this price point on DGAZ, it goes down and perhaps you hold the trade, and when it goes up, hold the trade, and you are losing a lot on DGAZ. So remember, just close the trades when you are in good profit that you planned previously. Do not close trades just because you are in a little bit of profit, but in a planned price point that you stipulated before entering the trade. This one is a price point that we stipulated previously in the morning. That's really a pre-market highs of 2 points. That's a really strong, and it's not just a gap. It's a really quite big volume, both spikes. So it's really a good indicator of the resistance. So if you enter the trade here, because you saw that it broke high, it went going for high highs, you enter here, close here, 0.5%. That's a 1.5% profit on UGAZ. And the end of the profit, as you can see, it's this movement that you could also enter the trade here, but remember, the same as this movement, where is it here? This movement that has a really big candle. This is the same compared to these kinds of trades. This candle is really big. You could argue that you could enter here and you would make a 0.7% profit, but as you know, it's just here. The previous highs were here, so it's just not a good enough margin of profit. same as here. It's the previous highs is like here. But if you enter here, that's a really good amount of profit to the loss. And obviously, if it breaks above, if it breaks below this price point, you'll close the trade. So the maximum amount of loss you're going to take is 0.5%, and the maximum amount of profit it's 1.2%. So that's a really good. It's probably like a 2.3 or 2.4 to 1 profit to loss ratio. And as you can see, the later that day it continues selling off, as you can see here, and it never broke above the descending pattern. So as it did here, and here, and here, and here, and here, it didn't broke above. So we saw it broken above here at this point. It was here selling off and broke above, hold above the exponential moving average. You can go seek for high highs, but remember, these are more risky trades since we are in the territory of going down. So if you set a trend line like in this point, you could argue that your price could go up and then go seek higher lower lows. So it's not really a good trade. But well, as always, thanks for tuning in with my channel. Hit the like button, subscribe, and I'll see you in next videos.